Did you know that despite Bitcoin's recent surge past $90,000, many investors are still caught off guard? A staggering 95% of investors remain unprepared for the next bull run. They are either unaware or simply ignoring the signs. This might sound unbelievable, but the evidence is hidden in plain sight. The data is there, yet it goes unnoticed by the majority. Most investors are still fixated on outdated strategies and fear-mongering headlines. They cling to old news and miss the evolving trends. They are missing the bigger picture, a picture painted with broad strokes of macroeconomic indicators and market data. These indicators tell a story of change and opportunity. This isn't just about Bitcoin, it's about the future of finance. The landscape is shifting, and those who adapt will thrive. This essay will pull back the curtain on the forces shaping the future of cryptocurrency. We will delve into the underlying factors driving these changes. We will explore why traditional market wisdom is failing. The old rules no longer apply in this new era of digital finance. Get ready to challenge your assumptions and gain a new perspective on the market. It's time to rethink what you know and embrace the future. The mainstream narrative is a chorus of recession fears. Inflation, interest rate hikes, and geopolitical instability dominate the headlines. Understandably, many investors are frozen in a bear market mindset, hesitant to capitalize on the tremendous opportunities emerging. This fear-driven approach relies on outdated trading strategies. Day trading and short-term speculation worked in the past, but the market is evolving. To succeed in this new landscape, investors need to shift their focus from short-term price fluctuations to long-term value accumulation. While the mainstream media screams recession, the noise can be overwhelming and often misleading. Savvy investors, however, know to listen to the market's whispers, tuning out the sensationalism to focus on the subtle signals. One such whisper is the MOVE Index, a measure of volatility in the bond market. This index often provides early warnings about market stress. Despite rising interest rates, the MOVE Index remains relatively subdued, indicating a lack of panic among bond investors. This suggests that institutional investors are not panicking. Instead, they are maintaining a calm and calculated approach. They are strategically positioning themselves for the next big move, analyzing data and making informed decisions. Another whisper comes from central banks. Their actions often speak louder than their words. Despite claims of quantitative tightening, we're seeing evidence of stealth QE through bond buybacks and other measures. This is a critical signal for the market. This injection of liquidity into the system acts as a lifeline for risk assets, including Bitcoin, which thrives in such environments. Furthermore, global M2 money supply, a broad measure of money in circulation, continues to rise, providing additional support to the market. This, coupled with increasing ETF inflows into Bitcoin and stablecoin behemoth Tether's growing reserves, paints a clear picture. Smart money is accumulating cryptocurrency, quietly but confidently, positioning themselves for future gains in this evolving market landscape. Section 4. Bitcoin's Technical Awakening. Technical analysis further supports the bullish outlook. The MACD, a momentum indicator, has recently flipped positive on the weekly Bitcoin chart. This is a significant signal suggesting the beginning of a new uptrend. Moreover, Bitcoin has decisively broken through its 200-week moving average, a key resistance level. This breakout, combined with the recent surge past $90,000, signals strong buying pressure and confirms the start of a new bull cycle. Section 5. Macroeconomic Winds of Change. While U.S. macroeconomic data paints a mixed picture with high inflation and slowing growth, it's crucial to remember that Bitcoin operates on a global scale. This means that while the U.S. economy might be facing challenges, Bitcoin's value and adoption are influenced by a myriad of factors from around the world. The interconnectedness of global markets means that economic trends in one region can have ripple effects across the globe. The U.S. dollar's dominance is waning, and many countries are diversifying their reserves into alternative assets like gold and, increasingly, Bitcoin. This shift is driven by a desire to reduce reliance on the dollar and hedge against economic uncertainties. As more nations adopt Bitcoin, its role in the global financial system continues to grow, challenging traditional monetary structures. Furthermore, the Federal Reserve is stuck between a rock and a hard place. The decisions they make have far-reaching consequences, not just for the U.S. economy but for global markets as well. Their policies are closely watched by investors and policymakers worldwide. Raising interest rates further risks crashing the economy, while keeping them low fuels inflation. This delicate balancing act is a testament to the complexities of modern economic management. The stakes are high and the outcomes are uncertain. Market expectations are shifting towards a rate cut by the end of the year, which would be highly bullish for risk assets like Bitcoin. Investors are closely monitoring these developments, as a rate cut could signal a more favorable environment for cryptocurrencies and other high-risk investments. The anticipation is building, and the financial world is watching with bated breath. Section 6. The time to act is now. The evidence is overwhelming. We are on the cusp of a new era in finance, and Bitcoin is leading the charge. The 2025 peak cycle potential is enormous, driven by increasing global liquidity, growing institutional adoption, and the inherent value proposition of a decentralized, censorship-resistant monetary system. Don't be caught off guard when the masses finally realize what's happening. The time to act is now. Educate yourself, develop a sound investment strategy, and position yourself to capitalize on the greatest wealth creation opportunity of our lifetime.